Hey everyone, welcome back to the Financial Drive. How are you guys doing today? Let's start with today's video, and by the title, you know it's going to be about investing. Yes, investing in stocks can seem daunting for beginners, but it doesn't have to be. In this video, I'll be providing you with a beginner's guide to investing in stocks. We'll be covering 10 essential points that will help you get started with confidence. So let's dive in. First, we want to understand the basics of stock investing, being a beginner. Because before you start investing in stocks, it's important to understand what they are and how they work. Stocks represent ownership in a company, and buying a share means that you own a tiny little fraction of that company. As the company grows and becomes more valuable, the value of your share increases, and that's where you get your profit. Second, determine your investment goals. After you understand how the stock market works, the first step to invest in stock is to determine what your investment goals are. You need to determine, are you investing for short-term gains or long-term wealth accumulation? Your investment goals will help you decide what types of stocks to invest in and how much risk you're willing to take. Once you have a goal in mind, the third step would be to choose a brokerage. To invest in stocks, you'll need to open a brokerage account. A brokerage is nothing but a company that provides access to the stock market, and the account allows you to buy and sell stocks. Research different brokerages to find the one that offers the features and the pricing that best suits your needs. Some of the brokerage accounts also offer free stocks when you sign up. Fourth is determine your risk tolerance, which is important if you want to be in a long-term game. Investing in stocks carries risk, and it's important to understand your risk tolerance before you start investing. If you are a risk averse, you want to stick with safe blue chip stocks. Later in the video, I will explain what blue chip stocks are. And if you're willing to take more risk, you may want to consider investing in small cap or growth stocks. Starting with blue chip stocks. Blue chip stocks are stocks of large established companies with a long history of profitability. These companies typically have a strong competitive advantage, which makes them a good place to start for beginners with a low risk profile. As you go ahead in the game, the sixth step would be to diversify your portfolio. Diversification is the key to reducing risk when investing in stocks. This means spreading your money across a variety of stocks and sectors so that if one stock or sector experiences a downturn, your entire profile won't suffer. My next advice would be to invest in low-cost index funds. Now, what are index funds? They're a great way to diversify your portfolio without having to pick individual stocks. These funds track a specific market index, such as S&P 500. And offer exposure to a broad range of companies. Best of all, they usually have a low fees and expenses, which is what you want as a beginner. Eighth, and the crucial part, would be to do your own research. You can also take suggestions from your friend who's a financial analyst, but doing your research is the most important part. If you're really interested in investing in individual stocks, it's important to do your own research. Look out for companies that have a strong track record of performance and a competitive advantage in their market. Now, for each company, you want to research points like their financials, management team, and growth potential. And this point is from my personal experience. Please don't time the market. Once you start trying to time the market, it's already a losing strategy. It's impossible to predict short-term market fluctuations, and trying to do so can lead to costly mistakes. Instead, focus on your long-term investment strategy and invest regularly over time. You need to look at your portfolio regularly and rebalance it. Over time, if you don't keep an eye, your portfolio may become unbalanced due to market fluctuations. To keep your portfolio diverse and aligned with your investment goals, it's important to rebalance regularly. This means selling off stocks that have performed well and investing in sectors that have been lagging. And remember, consistency is the key here. Lastly, I would advise you to seek professional advice if you want to go from beginner to intermediate level. If you're still unsure about investing in stocks or you're not comfortable managing your investments on your own, seek professional advice. There are several places where you can go, like financial advisors, brokerage firms, or online investment services. When seeking professional advice for investing, it's important that you do your own research and choose a reputable and qualified professional or service. Look out for professionals who have relevant certifications and experience, and be sure to ask about their fees and any potential conflicts of interest. A financial advisor can help you create an investment strategy that aligns with your goals and your risk tolerance. So here's a beginner's guide to investing in stocks, and investing in stocks is a great way to grow your wealth over long term. By understanding the basics of stock investing, determining your investment goals, and diversifying your portfolio, you can minimize your risk and maximize your returns in long term. Remember to do your research, invest regularly, and seek professional advice when needed. Stay disciplined and stick to your investment strategy, and you will be on your way to building a successful investment portfolio. Lastly, if you have any other tips or questions for investing, please share them in the comments below. Thanks for watching the video and happy investing. I'll see you in the next one. Till then, goodbye.